Hey, everybody. Welcome to a special video recording edition here with Olivia and Blaise. And one of the common questions that we get asked is, how do I look up company financials? Like, what's the best way to do that? And what's a good free resource to do that? And I think if you're looking up stock prices of companies, I think just like Google or Yahoo Finance is great. But there's a website that's called BAM SEC. SEC, of course, is the regulatory body, the primary regulatory body for the financial industry. And so it's like BAM SEC is kind of like the way you'd say it. And this basically allows you to look up any corporate filing for any company. And I want to pick a company that has a pretty straightforward set of financials that also is kind of very well known, where the business model is very clear. So I'm going to pick Moderna. What does Moderna do, guys?
Creates a vaccine or
COVID drugs. Yeah. mRNA vaccines. Yeah. But they were a company, like they had been like a emerging biopharmaceutical company for a while, and really kind of like COVID allowed them to produce this mRNA vaccine that was their first drug on the market. So this isn't a huge pharmaceutical company with like 60 drugs. And as a result, it makes their financials pretty straightforward. There's a lot of stuff on this page, but really, if you're just trying to get a sense of what the three statements might look like for a real company, what I'd encourage you to do is go to this financials section and pick any of the Qs, any of the 10 Qs. And 10K is the name of the annual regulatory filing that every public company has to post. So if you're a public company, once per year, you have to put this really big document that talks about everything going on in your business. If you want to get up to speed on a company, it is a great way to understand the business of a company, but it is a very time inefficient way to do it because, my goodness, look at this document. We're scrolling and this is page 39. And if we go down to page 99, we're still not yet at the actual financial statements. And so here they are. Here is their consolidated balance sheet on page 114. So if you want to go and do that, Godspeed. If you really want to get to know a company, there's some great stuff in there. Your best friend when reviewing these is Control F. So for example, if I'm just Control F for revenue, and then there's like all of these terms, but I can go down to the bottom, and finally we get to revenue. So Control F is your best friend if there's something that you're looking for in these filings. So I'm going to encourage, if you're just trying to look at three statements for the first time, don't go to a 10K, go to a 10Q. These are the much shorter quarterly filings that all public companies have to produce. And as you can see here, oh, look, our balance sheet's on page 5. And our income statement is on page 6. And then there's a couple of other things, and our cash flow statement is on page 9. So much more digestible. The 10Qs are much shorter, and that's where we're going to look to start. And so here on our balance sheet, I want to just talk through a couple of these line items. And the first thing is, what are our total assets? Do you guys see that?
Yep.
So we have, and this is all dollars and millions. So this is 24,125,000 of total assets. And what is our total liabilities plus equity?
24 million.
It's the same. Yeah. So their balance sheet balances. So that's good. And so if like one question that somebody might ask is like, what does the strength of their balance sheet look like? Like, is this a good balance sheet? And your first thought might be like, well, I don't know. Like, it balances, so it's like not incorrect. But really what people are thinking about when they ask a question like that is they might want to look at your cash or your current assets. So they have about $3.4 million of cash. And then they have these like investments, they have accounts receivables. So accounts receivable is money that people owe you in like pretty short order. It's not like debt. It's like if you are Moderna and you give a bunch of mRNA vaccines to a local government, there is some time between when you deliver the shipment and when the government pays you. By the way, in a lot of cases, sometimes those are like the government will pay you up front. And so that would then be a liability because it's something you owe to them, but just as an example. And then inventory, what's inventory for Moderna?
Wouldn't inventory just be like, I guess, how many vaccines they have?
Yeah, it's vaccines or components of vaccines that
Okay.
might not have been assembled yet. It could be either that are just sitting in their warehouse and haven't been sold yet. And so if you're trying to look at this company's balance sheet and you might be worried about their ability to make interest payments, pay employees, something like that, one of the things that this current asset line item is trying to indicate to us is that there are things besides just cash that the company thinks could become cash in short order if they really needed it to. And that's kind of what current assets mean. So accounts receivable, they're expecting to get paid the cash pretty soon. Investments, this might be like holdings in other companies that they own. And so they could just sell those. Because notice they have like non-current investments too. So these are investments that would be hard for them to liquidate if they needed to.
Can you give some example of that, Craig?
Yeah. So one thing that Moderna might do is they might invest in a very early stage biotech because they think the technology is promising and they want to be an equity owner so that they get regular reporting on how testing is going. And if you've invested in that biotech, it's going to be pretty hard for you to like sell that stake to someone. Like if you're like, oh, like we're in tough shape and we own 5% of this tiny company that nobody's ever heard of that has this really complicated technology that's unproven that we thought was cool, but now we're trying to sell it. Basically, nobody will want to buy that. Or if they do, they'll buy it at a huge discount to the true value. Or they'll like take forever to like find a bunch of PhDs who can like from the outside validate that it's not like crack science. So that would be a non-current investment, is basically something that they're saying, not that it's impossible to sell, but it would not be easy for us to sell this in a week if we needed to. Whereas a current investment might be something like they might invest in 1 month US treasuries because they might basically say, hey, we have, almost $9 million between these two line items sitting on our balance sheet. We should at least earn some interest from some of this. And we don't like need $9 million day in, day out. We probably only need like 3.5. So that would be an example between a current investment and a non-current investment. And then they have all these other assets. So they have these deferred tax assets. Hey, that was what we were just talking about. So Moderna operated at a loss for a while because they were developing these these mRNA vaccines, and they didn't start actually making a profit until recently. And so they've been draining this deferred tax asset account ostensibly as they've been earning money. And then property, plant, and equipment. So they probably own some warehouses where they produce this stuff. They might own some like corporate office space. And then right of use assets, operating leases. So they might lease some space, and they might have like a 30-year lease on like a corporate office space. And they're saying that that's like a right of use asset, which I'm not exactly, that's not like a super well-defined term. But I'm sure if we control F for right of use assets in the 10K, then it would tell us about it. So that's on the asset side. So like if someone's asking me like, is this a strong balance sheet? I'm not looking at like the value of their property, plant, and equipment. I'm really focused on their cash and equivalents, and maybe also like cash and equivalents plus investments. Because as just like a regular state of their business, they will always have receivables and they will always have inventory. So I'm really basically focused on these two things. And I'm trying to compare that against if they have like some huge liability. So they have some current liabilities, they have accounts payable. So that's money they owe to people. They have some accrued liabilities. I'm guessing this is in a lot of these, I'm guessing for the accrued liabilities are they've taken money from people and have promised to deliver mRNA vaccines to them, and they haven't done it yet. That's my guess for these. And then they have some deferred revenue, operating lease liabilities, financing lease liabilities. So they don't really have any debt. So I would call this a strong balance sheet, because that's like a lot of what I'm comparing is like, do you have a lot of debt or like regular interest expense where your debt like really dwarfs your cash on hand plus your earning potential? So that's a lot of what I'm looking at.